Hey guys, thanks for dropping in again. I'm Ty. This is Stock Muscle. And the company I want to talk to you about today is what I consider a disruptor. I was sitting around having a conversation with my fiance, and I asked her, when's the last time you remember vacuuming a floor? And we got a good chuckle out of it because we realized that we haven't had to do that for a while. And it's because of the company I want to talk to you about today. So stay tuned. Okay, so the company that I want to talk to you guys about today is a company that you may or may not know. Many of you will. The company name is iRobot, and their chief product is called the Roomba. I'm sure many of you have owned the device or maybe seen the commercials. The device is pretty much or is slowly becoming ubiquitous in this country and many other countries. As I said in the intro, I was having a conversation with my fiance, and I realized that I haven't had to vacuum a floor in several years because I've owned a Roomba. That's life changing. The great Peter Lynch, as I said in my last video, said to buy things that buy things that your family's familiar with, buy things that are I prefer tangible items and tangible things. And this is one that's pretty close to me because I use the device in my daily life, so I'm considering becoming an investor. Probably going to buy in some shares this week. I'll let you guys know what my cost basis is and what position I took in an updated video on the company. And let's delve into it because the first thing we want to make sure before we make any investments is that the company is sound. So let's go through the rigors and make sure that we're buying into a sound company. First thing we're going to look at, as usual, is going to be the company's revenue. So when we're looking at revenue, of course, what we expect to see is a company that grows revenue. In order for us to be buying the shares, we want to make sure that the company's bringing in money and that revenue is growing. So from 2016 to 2020, iRobot has grown their revenue from $660 million to $1.4 billion. Very strong revenue growth. Net income is following. It's not about how much you make, it's about how much you keep. So net income is following revenue growth. It's grown from $41 million to $147 million. Now, it's not actually tracking at the same percentage, but that's fine. We want to see that net income is increasing alongside revenue. Earnings per share looking good as well. So from 2016, they were making $1.50 per share, and that's up to $5 per share. So we're talking about a company that's really increasing profitability and making it trickle down to earnings per share. They're doing a great job there. That's a very bullish sign for me. The next thing that we want to take a look at is the company's balance sheet. So we want to test the company's solvency. If you got an emergency, iRobot Corporation, and you had to pay all your bills, would you be able to do that? And the answer is a resounding yes for the iRobot company. So let's take a look at the assets column. It's highlighted in yellow, top column. They have $1.1 billion in assets and only $385 million in liabilities. So the iRobot company could pay their debts off and have no problems going forward as a company, and that's what we want to see. I believe it was Ben Graham that says that it's either Ben Graham or Warren Buffett that believes that assets should double liabilities, and that's a triple check mark here for iRobot. So very strong there. Lastly, but not least, let's look at the company's cash position. Once again, you guys know I'm a big proponent of cash because what can companies do with strong cash positions? They could do things that enhance my value as a shareholder. The company could buy back shares. They could launch new products. They could acquire other companies. They could issue a dividend. They could do a lot of things with their cash position that's going to help me as a shareholder. So I always rather have the company or be an investor in the company that has cash than one that doesn't. I'm always going to make the decision to go with a company with cash. So iRobot has grown their cash position from $116 million to $232 million. Pretty strong cash position. Not out of this world, but I think it's a strong cash position. So what are my catalysts for the stock? What's going to get us to where we need to be? So guys, I've been flirting around a lot with Y charts. I'm thinking about getting a subscription because I'm really a fan of their charting and the way you can put together charts. I'm thinking of getting a subscription. So I'm doing a trial run with them. And I pulled up the trial version, and if you look to your right, I highlighted under the ratings and reportings columns, they think that the company's about 40% undervalued. They think that the share should be about at $160 per share, which is strong. It's not what some would consider a home run. There's a lot of new investors in the market that are expecting companies to double and triple in short time periods. And you know what? I'm all for that. If you can get it, then you get it. But, not every investment has to be a home run. Let's look for some singles in the portfolio too. We're going for all home runs. We're probably going to strike out a bit, right? So this company it'll be a nice single. If we can get 40% out of iRobot, I think that'd be a very strong addition to the portfolio. And that was striking to me when I opened the company up on Y charts. They think it's about 40% undervalued. Okay, so what are my three catalysts for the stock? When I first started to look into the company, one of the first questions I had as an investor is, what's the size of the addressable market? I also wanted to know how many devices iRobot had sold already of the Roomba and the Brava devices. So I pulled up some information from the U.S. Census Bureau, and according to the Bureau, there are, from 2015 to 2019, so it's a little outdated, there's 120 million households in America. 120 million households. According to iRobot's investor relations page and information, they've only sold about 30 plus million of these devices. So when we talk about a runway for growth, there's still a large addressable market for these devices. Plenty of households still have the ability to buy these devices. So that satisfied my first concern. The second thing that I think is going to be a nice catalyst for the company is iRobot is currently buying back shares. So last year they authorized a $200 million repurchase. They did make a bulk purchase last March. They brought in 663,000 shares for about $20 million. But according to what I see here, there's still about $150 million in share repurchases that are authorized through September of this year. So that's a pretty bullish sign. The company should still be in the market buying their shares. So when a company buys back shares, that's a plus, because when they retire shares, they take shares off the market. That makes my shares more valuable because there's just less of them, if that makes sense. So share buybacks are a very bullish sign in my book, and many of some of the more famous investors tend to favor companies that are buying back shares. The third thing, and I really didn't want to get into this, but I will anyway because I'm not going to shy away from it. It's such a prevalent part of the retail investing community. Short interest. We're seeing short squeezes all over the place. I think that's going to continue going forward because the public is more conscious about short interest now, and retail investors are actively trying to induce short squeezes. So I don't think it's going to go anywhere. So when I bring you a recommendation, we're probably going to go over the short interest as well because it's not going anywhere. It's a part of the market now. Now that the retailers are here and they're aggressive, we're going to go over short interest. So the company has 17% of the float is shorted. That's significant. Anything over 10% is significant short interest. I believe the short interest of the entire S&P, I think, is something low like 5 to 7%. So when you get into 10%, 15% and over, that's considered reasonably high short interest. And, if there's a rush to cover for some reason, we could see the price appreciate pretty rapidly like we did back in February on this exact company. According to MarketBeat, it would take 8 days to cover at the current average volume. That's pretty significant as well. So, the company does have viable and meaningful short interest, and in the short term, that could push the stock up significantly. So I'm going to be keeping my eyes on that. So those are my three catalysts. The company has significant short interest. They are currently buying back shares, and the overall addressable market for the company is pretty strong. So we went through our fundamentals. The company is a sound company. The balance sheet looks good, strong cash position, revenue's growing nicely. This is a company that I'm going to be buying this week at some point myself. I'll watch it for a bit to see what the price does. Maybe there's some room for it to go down a bit, but I'll be keeping a close eye on it, and I'll probably be starting a position at some point this week. So that's my analysis on the iRobot company. Leave a comment if you agree or disagree. Also, if you like the content, please hit the like button and subscribe if you want to see more content going forward. I got a lot of companies that I would like to talk to you guys about. So stay tuned for more information. I'm Ty. This is Stock Muscle. I'll talk to you guys later.